What's going on, Find My Way Home Nation? So today we are going to talk about something that's really important. So before you buy a house, there are a lot of different factors that you really need to consider before buying your house. And this is 2023, so we're going to start out with 5 to 6 things that you should be looking out for. So number 1, what is the first thing that you need to do before you go out and look for a home? You got to know what your credit score is. You got to have some sort of credit monitoring that's provided through your credit card companies or one of these consumer credit access things. But it's really important not to go at it on your own, because you may not be the professional at fixing your own credit. Just like I'm not the professional of doing what you're doing, it's really important to let the professionals handle it. It's really important. So if you know what your credit score is based on one of these credit monitoring services, know what the deficiencies are and know what the pluses are and know what you're going to be paying off. So when you're talking to your loan officer and you have a lump sum of money, like we're getting ready to have tax time right now. And with the tax time, a lot of times we want to put it towards something that's going to enhance your future. And one of the best ways to enhance your future is to enhance your credit score, because a lower credit score is going to lead to a higher interest rate, and a higher credit score is going to lead to a lower interest rate. So always know your credit, and most of the time your loan officer should have either a rescore model or a what if simulator for us to know what the credit score is and how to fix it. And if it's really bad, then we may have a credit repair person that can help you fix the credit as well. Number 2 is know your loan types and make sure you get all of your options. I've been doing this for over 16 years, and one of the biggest things is I've worked for multiple companies. And multiple companies, what I've noticed is that not everyone offers the same type of loans. Not everyone's going to offer the different credit score criterias that are available through the agencies. They may have their own overlays or guidelines because they only carry like conventional loans and they don't do FHA loans, or vice versa. So you need to know that you have all of your options presented in front of you, because they're all going to have different down payment options. They're all going to have different closing costs that you can get from the seller. And they're going to all have like different terms, such as like upfront mortgage insurance, monthly mortgage insurance, maybe both, maybe a buyout, and maybe none. So it's really important to know that. Number 3 biggest tip is to know whether your loan officer is retail or wholesale. As you can see on my merch, what we always talk about is we're always talking about getting wholesale rates. Who wants to spend more money? I know I don't. When I go to the store and I go to 2 supermarkets and I look at the same ribeye steak, I love ribeye steak, by the way, so if you want to send me some ribeye steaks because you like watching my videos, please do. But when I'm looking at 2 ribeye steaks, they're all going to look different, right? You know, every cut's going to be different. However, if I buy it from, let's say, my neighborhood grocery store versus going to like a high-end, like, you know, grocery store that's really decked out and looks really nice, guess what? 9 times out of 10, if they're not on sale, that higher end price store is going to make me pay a little more, whereas the mom and pop place isn't going to make me pay as much. And then guess what? There's also places like Costco and Sam's Club and BJ's, the wholesale places that sell it for even better, whether it's the better quality for the same amount that I would pay at the high-end store, or the same quality at a lower price. So knowing whether it's wholesale or retail is really important. Number 4, vetting your real estate agent. It is extremely important to vet your real estate agent and know whether they've had any sales, any transactions, whether they are like negotiating on the houses. So when you go onto Zillow, you can a lot of times see, hey, this is what the realtor has sold, and this is what the house was listed for, and this is what it sold for. You can see how many sales they've had based on sites like Zillow and Realtor.com and Redfin. So you know that they have really good negotiating experience and they sell, right? You know, because you know, if someone doesn't make a lot of money, then they may be struggling to pay their bills, and they're just trying to sell anything they can to get you into the house to make their bill payments. Okay, so it's really important to vet your real estate agents. Number 5 is to know if there's any discount programs out there. Like one of the programs that I'm personally part of is the Homes for Heroes program. And the Homes for Heroes program is really good. You're a veteran, public servant, such as a teacher, a firefighter, a policeman, someone that works at a medical facility. These are people that we give discounts to, and you're a hero, so we should give back. So know all of the incentives that are out there. Know all of the mortgage credit certificates and all the different, like, you know, nuances that are out there. the first-time homebuyer programs, Fannie Mae guideline changes with the loan level pricing adjustments going away based on your income is really important to know as well. So make sure you know all of that, because going into your home purchase, you're living with the loan that you have. And finally, it's really, really important to start gathering your docs. We always talk about game planning. You know, anyone that watches a lot of my videos is going to know, hey, David's Eye is a huge sports fan. I'm extremely competitive when it comes to everything, right? It's really important to, like, when you're competitive and you're going to war, or you're going to even soccer. So I'll use my kids as an analogy, right? If my kids sit at home and they twiddle their thumbs all the time by playing video games, you're probably not going to be really good at soccer. You know, they're going to go out there and it's going to show with the performance on the field. So if you're going out there and you're looking to buy a home, it's really important to start gathering all of your documents in advance, okay? We're going to talk about the rule of 2, okay? The rule of 2, you need 2 months of bank statements or asset statements. You need 2 months of income for pay stubs. And if you're self-employed, you need 2 years of tax returns. And you also need 2 years of W-2s and or 1099. So income, any assets, and then finally, any liability documents that don't show up on your credit report, such as child support, alimony, maintenance, any childcare expenses if you're getting a VA loan or any type of loan that calculates residual income. And just to have it in advance is really important, because, you know, when we lock in loans, we're locking in your rate at a certain period. That means the investor is guaranteeing the rate. So if it goes up, your rate is already locked. It's not going to affect you. And if it goes down, you may be able to renegotiate. But you know, I think the biggest challenge that customers have when they have a bad experience is the fact that they do not have all their documents together, or they do not hand in the documents in advance to the loan officer. So when we go back to them, we are asking for way more documentation that we should have received up front, and that usually leads to a bad experience. So these are 6 tips that are really important when you're buying a home in 2023. If you like a lot of the content that we talk about here, please be sure to comment below. If there's anything that you would like for me to address and talk about in the future, I'd love to help you with that. And my phone number is 757-478-8493. And I'm just saying, give me a call.